This is our Forex blog for October 9th, 2013. We've been working hard to improve our currency indexes, and there was a bug with the previous day's high and low that we feel that we fixed. And it's one of the better ways of finding out how strong each currency is. For instance, the dollar. If it goes above the previous day's high, this dotted green line, it's super strong, and it's stronger than it was all day the previous day. And when you use that and combine with the daily trend, weekly trend, and monthly trend, in this case, the daily trend's up, obviously the weekly trend's still also up, that's a strong dollar. And you want to trade that versus a currency that's weak. Seeing a currency that was strong, such as the euro, and it's not able to get and stay above the previous day's high, when it breaks down right there, which is also the hourly moving average as well, that's a big sign that the euro's likely to fall for usually 30 minutes to 3 or 4 hours, and that's exactly what it happens. And so you can use these tools to anticipate trend direction. Let's link these together so that when I scroll one of them back, they all will. So when the euro breaks down right here, obviously the dollar's strong. The pound is underneath its hourly moving average, but its previous trend was up. You could certainly look to sell the euro pound. The yen is clearly in a downtrend, so you don't really want to be selling the euro yen. However, the yen is at the lower containment band, so most of the time it will get a bounce off of there. So if you want to take a chance that the yen does get a bounce, like it oftentimes does, and the euro is breaking down, you can take that trade. The highest probability one is the dollar, which is going up, the euro is going down. Why try to take a chance when you can have a home run? A little bit before 2 o'clock, you're looking to sell the euro yen. And you can see on the chart, it doesn't matter what time frame you use, whether it's a tick chart, range chart, 2 minute, 3 minute, 5 minute, 15, 30, doesn't matter. At 2 o'clock, you're looking to sell this. And you can see it fell from 35.60 all the way down to 20. Nice 40 pip move. You can also, for those of you who don't want to learn how to use multiple different tools to trade, you can just take the signals from our FX trade signals. And there's one of them today I put in that only works live. So I have a chart in here that I created in Photoshop to let people know that one of these signals only would have worked live. There's no way that the signal would have worked other than live, because the market was extremely weak. And notice it's a euro dollar, and you can see at 6 o'clock, 5 o'clock to 6 o'clock, the euro was super weak, the dollar was super strong. It's very hard to line that up historically on charts, so I had to add that to the chart. But even if you didn't know what you were doing, you buy here, you have a small loss. Sell here, nice wins. Sell here, small win. Sell here, 20 pip win. Sell here, very, very tiny loss or break even. Sell here, made money on this. This one was a loser, small win, and very tiny loss or break even. And the key to trading is small losses, bigger wins. There's nothing more complex than that. That's all you got to do. And when you trade one that's weak versus one that's strong, or even one that's weak versus one that has been weak for many, many hours and is likely to get a bounce, the euro yen also is likely to fall at 2 o'clock. Maybe not quite as much. So if you look at the euro yen, 2 o'clock, you're looking to sell this. Obviously, you got a nice little trend line break right here. You sold that, you put your stop above the high, and you can see it took the yen almost an hour before it started getting strong, and then it fell. So you had a whole hour to look to get into this trade. You could have just drew a trend line on the yen here. Oops, that's the regular line. Let me do the trend line instead. You draw a trend line on this, and when it breaks that trend line, then you get in the trade. You can see it was exactly at 240 that it broke the trend line, and the euro was already going down. So this was a very high probability at 240 to get short. That's this red bar right here. Let's zoom in on it so you can see you still had 5 to 10 minutes to get into this trade before the real move happened. So this bar right here is at 540. So when the market broke that low, either 5 minutes later or 10 minutes later, you're in that trade at 132, and you can see this very quickly fell down to 130.160. Beautiful 40 pip win. And typically, when I take trades, especially off, whether it's fast minute-based charts, range charts, or tick charts, the stop's going to be a few pips above the high. And anytime you're getting into a counter trend trade, the euro-yen was going up before the euro got weak. In this case, if I sold that low right here, I'd put my stop above the high here. You're risking 10 to 15 pips max. And the key to trading is small losses, big wins. That's it. There's nothing else, more complicated than that. As you scroll forward, you can also see the pound was going sideways and broke down. The dollar was strong. So, later in the day, especially a little bit before 3, you could look to sell the pound dollar. So let's take a look at that. Let's go back and look at a little bit before 3. We know that the dollar is one of the stronger ones. It's above its previous day's high. The pound is weak, and you can just clearly see that break there. It broke and kind of went choppy into a little range, and then broke down again at 60.30 and fell a very fast 60 pips. Absolutely fast. So, you don't want to get out of your trades too quickly when they're just chopping around. If you want to go short here with your stop above the high, once it's chopping around, you move your stop down. It's chopping around, you move your stop down. It's chopping around, you move your stop down. That way, if you're not going to make much money on the trade, let the market price come up and hit your stop before you get out, because every once in a while you're going to hit a home run and make an extra 60 pips on the trade. And that's just the key to trading. Small losses, big wins. And don't, take away your chance of success by getting out of trades too soon. If they're just chopping around sideways, it's certainly okay, and I do it all the time, to exit 1/3 to 1/2 your trade, but hold the other half on, or the other 60-70% of the trade if everything looks on the currency indexes like it's going your way. The dollar's going up, the pound broke down, there's a support area right here, the point of control, the most actively traded price the previous day. But other than that, once it breaks that, it's likely to go to the lower containment band or the previous day's low and get a bounce. And today was so weak and went through all that. So that's it for today's Forex blog. Hopefully it helps you use our currency indexes and our FX trade signals to trade, and you should be doing very well trading.